What's up, everyone? So there's a new filing that everyone is demanding that I cover because I work for you now. But hey, let me just show you why I haven't covered this one. This one was originally released in 2010. This is the filing right here. It's, rules, prohibition against manipulation, fraud, and deception in connection with security-based swaps. Yeah, same shit. 10 years later. Basically, all it's saying is that they're going to require the reporting of security-based swaps, yet they still have it can-kicked till 2023. All this is noise to get you to take your eyes off the ball. All they're saying is we're going to regulate swaps, but then by the time that the enforcement is actually in place, the swaps won't have any incriminating underlying instruments. I mean, that's how these things work, right? The reporting requirements is 150 million or above in swaps. Let's go ahead and whack just to make everyone happy. This is a nothing burger. Just to let you know. In essence, this is a nothing burger. It's just the SEC singing a new song and a new dance, as they always do. Where did it go? Anyways, look at the title here. It's Reproposed Rule. So this is the structure of the filing. Introduction, background, observations in the credit default swap market. There's crime. Overview of the proposal. Reproposed Rule 9J-1, which is the one that was referred to 10 years ago. It's a nothing burger. They're just saying that, you have to meet a certain threshold, and then you're going to have to report swaps, the amount of securities in them, the same shit they've been saying for 10 years. If you want to read it, I'll link it below. It's really not much. It's just saying the same shit they've been saying.